Good morning, this is Tim McGowan for the Finance News Network. US equities were higher in fairly choppy Thursday trading, finishing slightly off their best levels. The Nasdaq Composite rose Thursday as Tesla shares surged on the back of better than expected earnings results. Tech stocks also got a boost from a softer US dollar. The tech-heavy Nasdaq gained 1.36%, the S&P 500 just under 1%. Meanwhile, the Dow Jones Industrial Average gained around 0.5% in choppy trading. The Nasdaq is set for a gain this week, up 5.3%. Meanwhile, the Dow is nearly 2.4% higher for the week, while the S&P 500 climbed 3.5%. Investors continued to pivot into tech stocks, which have fueled this week's rally as strong corporate results had Wall Street on the hunt for beaten down assets. Consumer discretionary stocks led the gains in the S&P 500, up more than 2% on the back of Tesla shares. The automotive surged about 9.8% after it reported stronger than expected results despite shrinking automotive gross margins. Shares are still down nearly 23% for the year. Growth outpaced value stocks by over 125 basis points overnight. Best performing industries included software, semis, streaming, casinos, apparel and accessories, autos and exchanges. Oil services, pharma, food and beverage, airlines, metals and mining were some of the laggards. More than 90 companies in the S&P 500 are now reporting earnings to date for the second quarter, and 78% reported above analyst expectations. Despite the tech stock's strong support this week, year-to-date the sector remains the worst performing sector within the S&P 500. Meanwhile, the US dollar declined following a surprise interest rate hike from the European Central Bank, which raised rates for the first time in 11 years. The central bank increased benchmark rates by 50 basis points. Today's move is the crucial next step in ending the ECB's era of ultra-loose monetary policy. The bank has already ended its multi-trillion euro program to buy bonds, and after 8 years, the end of its policy of negative interest rates aimed at prompting banks to lend generously is in sight. Consumer prices are soaring at their fastest rate in a generation in Europe, climbing 8.6% in June from a year earlier in the face of rising energy and food costs. Policymakers must now walk a fine line between easing price pressures and courting a recession. The US dollar pullback was mentioned as another tailwind for equity markets, given its heightened presence as an earnings drag. Also, some dampened concerns that Russia will meaningfully cut gas flows to Europe. The Australian dollar has strengthened compared to the US dollar overnight, buying 69.33 US cents. In commodity news, iron ore futures are pointing to a 0.6% fall. Gold bounced off a one-year low, gaining just over 0.8% on Thursday, benefiting from some safe haven interests and economic concerns as the dollar eased. Silver was up just over 0.6%, copper was down 0.6%, and Bitcoin futures rose 0.9% just off their best levels. Oil lost 3.3% on Thursday on higher US gasoline stockpiles and after the ECB rate hike stoked demand worries, while returning oil supply from Libya and the resumption of Russian gas flows to Europe eased supply concerns. The SPI futures are pointing to a 0.2% gain. Have a great weekend. This is Tim McGowan for the Finance News Network.